Good morning, everybody. This is Dennis Wilborn from the Active Trend Traders, and joining me from downtown San Jose. Are you in San Jose today, David?
I am. I'm home, and I'm going to be home for a long time, I hope.
Okay. We got David Grandy from All About Trends, and also his partner. We got a special guest. Harlan has joined us also, and may have some comments. That's Harlan Payan, like Ryan with a P, right, Harlan?
Yeah, exactly.
Exactly. So I want to thank everybody for joining us. This is a little bit of a different time that we're experimenting with, and we want to see how that works for you because, one, we would like to get you guys information earlier in the day on Friday, and I want to thank everybody who has been finding the recordings of our Friday show on YouTube and checking out what we've been saying. Hopefully you've been able to find a couple of good trades, and as usual we have been, David, I think we've been so really right on with all our observations and clues that we provide every week to say where the market's going to go. Don't you agree?
Yeah, it's been it's been pretty fun. Yeah, we seem to be right on the pulse with everything, so it's been working out.
So that's awesome. And anyway, I want to remind everybody that all materials that we do present are for training purposes only, and traders should paper trade any new method prior to risk of their own personal capital. And additionally, we will be reviewing stocks, your stocks, at the end of the presentation and the discussion, but those, those will not be recorded, so it'll be about a half hour from now. And so if you have some stocks, to be respectful of other folks on, who are attending, try to keep it down to either, one or two stocks, or just choose the one you're most interested in, and let us know whether you are already in the stock or are anticipating getting in the stock, and we'll give you at least a what we see in the charts or don't see in the charts. So let's get going. Oh, this is exciting news. Make sure I got to the right one. Oh, this is exciting news. Again, want to welcome everybody to the live show, but next year we David and I don't know if Harlan's going to join us or not, but David and I are going to go on the road, and we're going to start doing some of these money shows. And the first money show that we're going to do together is going to be down in Orlando, Florida, over February 4th through the 7th, 2015. And I'm excited about it, David, because that's my wife's birthday's in that time frame.
Well, there you have it. Take her to Disney World.
I am. I'm going to get her some mouse ears or something. I don't know.
And write it off at the same time.
Exactly. And so anyway, if you do know somebody or you are in the Orlando area, we'd love to, either meet you or your friends down in Orlando. So we're excited about this opportunity. And I want to thank David a lot. David presented at this Money Show in San Francisco a couple of weeks ago, did an awesome job, and I'm just absolutely overjoyed to be able to join him in the effort going forward with the Money Show. So let's get down to business, though. I want to remind everybody that we love to talk about stocks. So if you do have a group that would love to plug in and with a presentation that we can do on how to make money trading stocks, Market Stock Talk, we can present either in person if it's here in the Bay Area, and or if we're traveling about, we can also present long distance, or we can link in with your group via webinar. And David, I know you like to talk about stocks. I like to talk about stocks, and so this can be a real win-win if folks would like us to do a half hour to an hour and a half presentation on how, into a little bit more into the details of what we do. Right, Dave?
I cannot wait for that. I love doing it, and I'm so happy to be back here doing the webinars live, and I can't wait to get the questions and feedback from folks and get back into it.
Cool. So let's take a look at where we're going now. Okay, last week we always put down in this lower portion down here. Let me get my drawing equipment out here. We put down in this lower area what we were saying about the market last week. Last week we were indicating record highs and holding, question mark. New record high, now stalling, that was the S&P. And what we see today, as of approximately 10 o'clock Pacific time in the market, is this last rally that we've been on since the early part of August has been more or less what I consider a low momentum rally, in that there hasn't been a lot of strong momentum, although it has shot off the bottom and had a really nice tradable rally. But is this finally broken is the question I come away with today. S&P, we fell from a brand new high back down to support. Will the support hold? That's the big question. NASDAQ looks like potentially, NASDAQ 100 looks like a potential pullback, but also support right now is holding, but are we seeing a little bit of a rollover? And then the Russell, at least when I wrote these charts, the short-term uptrend line that we've been following for the last few weeks on the Russell had been broken. We'll take a look at that to see if it's still that way. And the big question I have going into September, is it time for the September correction, or at least pullback that would then set us up for for some potential in the October time frame. I think my next slide should say, oh, it doesn't. Again, this is a chart that I like to look at, and I think I've just about got at least David converted over to potentially taking a look. This is if you want to trade the index. This is the percentage of stocks above the 20-day moving average on the NYSE, and every one of these little green dots down here is where the market actually came off of a support area and ran for a pretty nice little rally. The upper levels, and we can see we got into that late last week. We tried to regain it earlier this week, but we got a little bit of a roll-off. And one of the things I was looking at, folks, just to give you an idea, from this high here, which was in early March, down to this low in April, was about 6 weeks. And it was about 6 weeks down to this low also. So if we project out from topping here, project out another 6 weeks or so, it puts us into about mid-October, which seems to time out pretty nicely and pretty well for a lot of the October cycles, when the market kind of goes back into an uptrend to go into the holidays and the Christmas and that kind of thing. So we'll be looking for what's going to be going on here. There may be a tradable correction in some of the indexes, and if we get back in here down in this area below 30 in the October time frame, stand by for a potential rally into the end of the year. Again, that's a potential because we don't know if it's going to happen or not, but we will be ready for it if it happens. Moving quickly to the charts. So, Harlan or Dave, you got any comments on that?
No, pretty cut and dry.
Yeah, exactly. These charts are
pretty straightforward.
Yeah. These charts are live. Folks, and normally we come to you and the charts have already finished for the day, and so what we get to do is kind of not forecast, but just talk a little bit about what's happening in the live market, which is a lot of fun. And what we see here is that this morning, or today, or over the last 4 days, we started getting some bearish candlesticks on the daily chart in the S&P. and we got a little bit of a breakdown this morning. It dropped back down to, guess what, support at the old breakout of about 1991. And what we're seeing right now is a nice little bounce. We still have momentum coming out of the market, and some of the indicators, the TSI and the stochastics, are looking a little bit weak. And I'm looking at this formation here. It's even more pronounced on the NASDAQ 100. Looks to be like a little bit of a rounding top type presentation. And if that fulfills, those typically get a nice little correction involved with them. Does it have to turn into a complete round and fulfill? No, it doesn't. But where we're at, some nice divergence on the weeklies. I won't say it's going to happen, but it does look like it might be a path of least resistance, moving quickly, at least down to the moving averages, guys. Get rid of that. Take a look real quick at the NDX. The NDX on a daily chart, as you can see, we're pulling back up above the 8-day moving average. We got a bearish engulfing, followed a hanging man. Again, the potential of a rounding type top and a rollover. You can see it a little bit more pronounced on the NASDAQ 100, and we're basically just stuck in this nice little trading range. We have support down here at 4,000. And we have resistance at 4,100, and so we'll see what happens. Where are we going to break? We could have a pullback to here and a bounce higher, or a pullback to here, a little bounce higher, and then that type of reaction also. Russell. As I said, when we did up the slides earlier today, the Russell was, at that time, it had broken this trend line that we've been following for several weeks, and look what happens. It breaks the trend line, but then recovers, which is a positive sign, recovers back above the breakout area of about 1163. I'm still looking to see what's going to happen here on these, somewhat lagging indicators. The stochastics have rolled over on the Russell, and so we'll look to see if we get a squeeze, a small squeeze back up, or it rides this trend line, and then I think the Russell will give us the first clue as to the weakness in the remaining portion of the market, because it has been the weakest link even during this rally from early August up. And so that's what I'm seeing going on in the with the indexes, guys. David, you ready to chat about some other stuff?
I am very ready.
Okay. Let me, as you're getting your slides ready, and I'm switching over to your screen, you now have the presentation. Folks, as David's getting ready, what I would ask you to do is we will look at some stocks towards the end. We'll keep the presentation to no more than an hour. Our part takes about a half hour, and then we'll look at other stocks for about a half hour after we're complete. But at that time, as I said, put your ticker and whether you're in the stock, out of the stock, or are looking to get in, and what price you got in. And you can start doing that now. And just so with that, David, I'm going to shut up. I'm going to mute.
Okay, thanks a lot, Dennis. Thanks a lot, Dennis. It was a great job, and yeah, I'm looking forward to talking with everybody about stocks again. So, yay, August is over. I hate the month of August because it's like the slowest month ever in the market, and there's just nothing going on. So I'm really glad that we made it through Labor Day and everybody's back to business and the market's back to its normal self. And so far it's been so good. I mean, there hasn't been this big sell-off that everybody was talking about and, you know, this doom and gloom. It's just been a real orderly consolidation thus far. Leading stocks are acting very well. We're seeing breakouts. We're seeing follow-through from that. We're seeing stocks trade very well within their overall trends. So, you know, good structure out there, good stuff happening. However, we're not just going to jump in with both fists now that August is over. We look for the best patterns, only the best, forget the rest, is our mantra around here, and we just need a little bit more time for some setups that we're watching to complete themselves. So we did a trade today, and that's really our only position right now. We're just taking it easy, waiting for these setups to complete themselves, and you know, the bowling pins to reset themselves, as we speak often here. So that's kind of where we're at, because we don't chase stocks. We want them to come to us. We buy support, we sell resistance, we short resistance and cover at support. It's real simple. We just trade what we see, not what we think, hear, or fear. We try to ignore the headlines and the talking heads on TV and all the fear and doom and gloom and all these reasons why the market should sell off or whatever. All we do is just focus on what the charts are doing, what the leading stocks are doing, and that's where we take our cue, and we buy when they tell us to buy, we sell when the charts tell us to sell, and that's it. And by doing that, we locked in gains of over $4,100 in August just from trading what we see. So we're looking forward to a new month here and more profits. So, all right, so in the market, the only three things you really need to know: uptrends and how to trade them, downtrends and how to trade them, and change in trend patterns and how to trade them. And we've got a little bit of both uptrends and downtrend patterns, so I'm going to go through both those setups. For the uptrends, there's two patterns that we commonly use. The first is what we call a pullback off highs, where a stock is in a clearly defined uptrend, trading above the 50-day moving average. It's made an orderly, low-volume pullback to support, and this is Fleet Core. It hasn't really completed its setup, but you can see it's well on its way to doing that. We had a nice breakout here, and it's been consolidating very orderly, very tightly towards support back at the original breakout, as well as the 50-day moving average. So we just need a few more sessions here for it to complete its pullback. We'd love to see it get closer to the 50-day, and then a break above the pink line is what triggers our long side trade. So this is one that's really high on our radar list. It's on our watch list now, and we just need to see that. Just a few more days would be great, but we're getting really close. We have a saying, we call it in the zone, and we're kind of getting in the zone with this trade. The stochastics are short-term, well oversold, so all the situations that we'd like to see for potential long side trades are right here. So, okay, so the other pattern we use with uptrends are trend channels. These are stocks that are also trading in a confirmed uptrend. There's clear support, there's clear resistance, and they're just trading within an overall channel. This is Apple. As you can see, nice trend channel here above the 50-day moving average. There's clear support at the bottom line here. This is the resistance line, and it just goes up to resistance, pulls back to support, up to resistance, pulls back to support, up to resistance, and now is pulling back to support. Had a difficult day a couple days ago, but still intact, trading in a nice uptrend, and it's nearing support of both the trend channel support as well as the 50-day moving average. Stochastics oversold, so we've got a lot of good things here to look at. So this is another one that we're looking for to take a long side trade. Again, just another few days or so to get back to support here would be really ideal. So. Okay, so those are uptrends. Let's talk about downtrends. It's the exact opposite of the pullback off highs pattern. Instead of looking for stocks that are in uptrends, we are looking for stocks that are in downtrends that have rallied back to areas of resistance versus pulling back to areas of support. So this is an example of how it works. You've got a stock that was in a nice uptrend, forms a double top, breaks through support, and then pulls back off of the lows up into resistance, which in this case is both lateral resistance and the 50-day moving average, and then the break of the pink line to the downside is your place to initiate your short sell trade. And it's really important that we have both these things. We don't want to try and short stocks up here because we don't know if it's just going to be forming a base or sideways consolidation and then move higher. We want to make sure that it A, breaks support, and then B, rallies back to resistance and then fails. And then that now we have the confirmation that this stock has changed its trend from an uptrend to now a downtrend. We have higher highs, higher lows. Now we have lower lows, lower highs. So that's what we're looking for. So this is Valiant, and you can see this stock's been in a prolonged downtrend now, and it has made a new low and has rallied back up to resistance at this long-term downtrend line and the 50-day moving average. The stochastics are short-term overbought. So all the conditions we're looking for are right here. We just need to see it break this channel to the downside. The only thing is about this stock is it's kind of a news-driven stock, and those can be kind of hard to trade sometimes. So that's the only thing. But I'm showing you this because that's the pattern, and that's what we're looking for. We've got other stocks on our watch list that have formed these patterns. So that's pretty simple what we do. There's real simple patterns. So what are we going to do now? We're just going to continue to be patient. We just need a few more days here for these setups to complete themselves and then trigger, and then we're just simply trade what we see. That's all we're doing. So if you'd like to learn more about what we're doing and get our complete watch list and receive trade alerts when a stock on our watch list initiates a trade, just sign up for our 15-day free trial. You get 15 days of everything our paying subscribers get, and you get to trade in tandem with us. So just go to our website and sign up for that. There's no credit card or anything needed. Just the email that you'd like the newsletter sent to you for 15 days. That's all you have to do. So that's all I have, Dennis. I'm looking forward to getting to the questions.
There, let me take myself off mute. Hey, there's a couple of questions that I will throw out to you. One is a question about somebody, Ronald wanted to ask a question about what about holding Apple through next Tuesday's news day?
Well, that's pretty interesting. Think about that once. I mean, that could be a nice little news-driven event there.
Yeah.
So, I can see the hype. Typically it's one of these issues that when something's brewing, hey, we're going to make announcements, and, it tends to create a bunch of hoopla, which it could send the stock higher. But I think what bothers, I have no problem with that. And I wouldn't have a problem even considering it if it comes down to, David, can you switch back to that Apple chart?
Yeah, and what I would add to that too is, what does the chart say?
Right.
The chart's telling us that Apple is in a nice uptrend and it's pulled back to support, and it's doing so in a relatively orderly manner. So that tells me that warrants holding through the news event. Now, if Apple were breaking through support and struggling, or was way over bought and way extended, then I probably would not want to hold through the event. But when the chart's telling me that the odds are going to be in my favor for holding through that event.
Yep.
So cool. Okay. Thanks, guys.
Anyway, here you go, Harlan. Here's the chart.
Oh, there you go, Charlin.
Yeah. Well, he pretty well covered it.
Okay.
Just watch the 50-day. Which is obviously right by trend channel support. And who knows? But if you come in, on Tuesday and they already gapped this thing up in anticipation of it, then you might want to just go, geez, here the stock is back at 102, 103. Basically, it's a missed trade if you're looking to get into it.
Yeah.
All right. But if you're there, you just got to trade the overall trend, and there's nothing right now that's telling you that you need to disappear from the issue.
Yep. Hopefully, depending on where you got into Apple, hopefully you took some profit off the table up at 102. And oftentimes when you take some profit off the table just a little bit, even if it's just a quarter of the position or a third of the position, it makes sitting through news-driven events a lot more comfortable. So I've got my chart back up. Let me see if I can find David. Thanks a lot, you guys. And we got a little bit into the stock analysis, guys, so now I'm going to have to talk really fast to get us done in a half hour, then we can get into stock analysis. Well, thanks for sharing all about trends. You know, active trend trade is, you know, we basically, whether the market's going up, down, or sideways, we show and teach our members how to trade in those kind of markets. As David was discussing, since we've joined up and combined forces, I think we have provided some really solid, excellent picks for people to trade in tandem with us. And David, are you guys flat to market right now?
Pretty much.
Okay.
We have one position we did this morning.
Okay, the one, and that was the short on
UPS.
UPS, and there was a question.
UPS.
Okay, there is a question about that. We will get that when the recording stops. But here's what active trend trading has done. Profits taken off the table since the 1st of June, $9,500. We still have the open position in Tesla, which is about another 4,900, and that was basically through the month of August. Our margin account currently is up 25.5%. Our IRA account is up 42%, and here's our winning trade percentage. Our yearly goal for the active trend trading system is to basically 60% winning trades and a 40% return. And we're moving nicely in that direction. Here's a little bit of what is offered under with the premium, under the premium and the basic subscription. And then moving into between now and the end of the year, we'll be offering system refinements for the longer horizon. Those of you who listen to our training webinar on Wednesday nights know that Mike Traeger and I are working on a longer-term, trade 4 times a year type of presentation, and then power ETF strategies, training courses for beginners, and more. And with that, I don't think I have anything else to cover, guys. Any last and finals before I stop the recording?
No, I think we pretty well covered it today.
Okay. So, hey, everybody, please have a great weekend. And remember, keep growing the egg. So from David, Harlan, and Dennis, trade wisely and trade profitably. Thanks for joining us today.